Are you setting up an account for investment and or business purposes? Whether you are structuring your investment and business as a sole trader, partnership, company, or trust, you should know what bank accounts you need to set up, what to prepare to set up or close up the account. Join me, Alex, today to learn more about bank accounts for investment and business purposes.
Welcome to the Money DNA channel. Money DNA is a financial fitness community where we bring everything about money and beyond money concepts in life to help you create healthy money habits and to be financially fit for good. It is important to understand that the advice is general in nature and does not take into account your personal objectives, financial needs, and overall well-being situation, and it may not be appropriate for you.
Hi everyone, it's Winnie here. Thank you for tuning into Money DNA. We'll be looking at bank accounts for investment and business purposes. Join me today is Alex May. Alex has nearly 7 years of banking and finance industry experience. His experience is across home lending, credit assessment analyst to personal banking consultant in Big Four banks. With his work, he helps customers achieve their banking and finance needs and offering support to guide them on this journey. Alex, welcome to Money DNA again.
Pleasure to be here again, Winnie.
Thank you. Alex, so last time we kick off with the basic, which is the bank accounts for individuals, joint accounts, and kids account. What I like to do is I like to continue this topic, but expand to other scenarios and needs, which is investment and business needs. And I think that all of a sudden I can think of multiple requirements and multiple accounts, range from sole traders, partnership, or even more complex like trust and company structures. So why don't we start it up with from the simple, like the sole traders?
Perfect. So we'll start on work our way from the more simple structures, sole trader and partnership, all the way up to companies and trusts. Sole traders, it's important to think of it, a sole trader as basically yourself as an individual. So usually a one person, but with an Australian business number for business purposes, and opening up transactions and savings accounts for the business purpose that are separate from the personal purposes. Mm-hmm. So usually an ABN is the only requirements when with a sole trader entity.
Yeah. Before you get into that, so can you please just explain to us what is ABN?
ABN, so ABN is Australian business number. So anytime an entity is wanting to perform business in Australia for income purposes, an ABN does need to be registered.
I see. So a sole trader can also set up a business, and then that will have an ABN as a Australian business number attached to it.
Correct. It is a way to identify for government, legal, and also tax purposes as well.
I see. So earlier you mentioned that sole trader is very much like individuals. They need to provide an ABN to set up this account. Now, can I just ask you that last time we touched on with the transaction and saving account, does that mean that sole trader can also set this two up for themselves?
Correct, they can. Most sole traders will set up a transaction account for business cash flow purposes of income and expenses, mm-hmm. and a savings account is usually set up for reserve cash flow for GST payment purposes, which is usually done, I think, quarterly, if I remember correctly, or can also be for staff wages, and it just keeps that separate from the main cash flow.
And is there any differences between, the individuals open up a transaction account and saving account to the sole traders?
There is a bit of a difference. A transaction account will have, for a business, will obviously be in the business name, mm-hmm. separate from a personal name. Yep. It may also have additional accesses available through the financial institution for business purposes, such as enhanced online banking, merchant facilities, multiple cards, accesses to the account. Mm-hmm. The savings accounts as well aren't so high interest with business accounts, usually because this can incur tax implications on already what is earned as taxable income with business.
I see. And I guess that for the audience who hasn't seen the videos about the transaction account and also the saving account, how to set this up, how to close the account, you can also check the videos there. All right, so we touch on with the sole trader. What's next?
Next is partnership. A partnership is similar to a joint account between two people or a household.
Yep.
So a partnership is usually when two individuals want to set up a business and work on it themselves, such as a best example would be two painters wanting to set up their own painting business and want to operate under their own individual names in the form of a partnership. So the taxable income will still relate to them individually themselves, and it will still have an ABN, the same as a sole trader account as well. The ABN will be for the partnership in the two names, or three names, or four names. It can have multiple partners to them.
Yeah, that makes sense. And I think that a lot of times when we are looking at people coming to open accounts, sometimes it could be like a couple of the good friends who would like to start up with a business together, or you could also get into investment options that they have. And then I think that the best way for you to know about what type of structures you are going to get into, the best way for you to do is actually talk to the accountant or the professionals.
Correct.
Yeah. Now, with a partnership, you said that it looks similar to the joint account. Does that mean that we can also set up a transaction account and saving accounts then?
Correct, you can. As we discussed last time and in episode 1, it also is dependent on the authorization that they want on the account. So either one person to access the funds or two people to access the funds. Always obviously important to understand the risks of opening up a partnership account between 2 or 3 or 4 people, to understand that those funds are unless the correct security and authorization set up, can be readily accessed by any one of the partners as well.
Yeah, and I think that the most important thing is, of course, set up a rules to upfront is going to really reduce a lot of complexity and also confusion in the future. Is it common for partners to set up a saving accounts?
Some partners may or may not set up a savings account. They may keep a savings account under their own individual names, but some, as similar to a sole trader, partners might keep a savings account as for reserve cash flow or capital for the business purposes as well. Yeah. Whereas the individual savings accounts will be for their own personal purposes.
Yeah, and I guess that for the tax purpose, what we just touched on with the sole trader and also partnership, the income that generated from the business itself is still going to flow into the personal income tax. So of course, at the moment, we're still looking at the very simple structure right here. Now, let's move on to a little bit of complex. Some people may think about open up a company or a trust structures. So why don't we start with a company then?
Company. So a company is usually a proprietary limited or just limited company. So it could be, for example, Bob Smith Pty Ltd. And the difference between that and a sole trader and partnership is the legal liability is related to the company entity only and not the individuals under it. A company will have an ABN, but also an ACN, which is an Australian company number. So these two are usually required when opening a bank account as well. And the government does require an ASIC, Australian Securities and Commission. So they will require that in order to open up a bank account or have a company entity.
I see. So I guess that earlier you touched on with something as every business, when we are registered, we will have an ABN, which is Australian business numbers. But once you are going to set up a company, you will not only just have an ABN, you will also have an ACN, which is Australian company number. And for most of the financial institutes, they will require you to have either just ACN or both of the numbers provided to open accounts.
Correct.
So does that mean that we can also open up with a transaction account and saving accounts?
Transaction account and savings account can be opened up on companies. A lot of companies aren't too tended to opening up savings accounts. They are more privy to opening up multiple transaction accounts.
I also noticed one thing though. Some people may come to us and say that, hey, for the cash flow purposes, I would like to open up an overdraft account. So first of all, can you please explain about what overdraft is, and then what will be the criteria for us to open an overdraft account?
An overdraft facility is basically the bank's money that they offer you to be able to utilize on an interest similar to a loan, as a loan facility, to be able to access funds readily available in order to utilize those funds, similar to as if you were holding cash in a bank account as well. Overdraft facilities will generally have an interest rate applicable to them that is payable monthly that is charged monthly out of the accounts as well. But we'll still have an available credit facility limit as well. Each bank is different in their criteria requirements for an overdraft facility, but a majority of banks will require some trading history. So if you're a new company that's setting up, it's best not to expect to be able to set up an overdraft facility or credit facility straight away, even though based upon your previous experience in the working industry, this is a new separate entity. That's the important thing to remember. So most banks will require 2 years of trading history by the company entity itself.
I see. And I think that is really important for our audience to understand that overdraft is actually considered a loan facility. That I used to explain that to my clients, that overdraft is very much like a big fat credit card. So if you are going to utilize this facility, if you will be able to pay it off every single month, then it probably is not going to trigger any of the tax payable. But once you are going to have some remaining as a balance, then you will have the interest payable is going to be triggered.
Correct. If utilized right, it can be quite a useful facility for example, if you have an accounts payable payment system for the clients and payments haven't been made on time, which is obviously created a shortfall in the everyday cash flow account. This is good, can be good as a backup.
Yeah, and I think that earlier, because we touched on with the overdraft is a loan facility, the person who will be able to open an overdraft for you might be either the banker or the brokers. All right, so we touched on with the company. What's next?
Next is a trust. So a trust is can be in many different formats, but we'll start as the most basic trust, which is usually a individual or family trust. Or family trust is also known as a discretionary trust. Trust entities are usually created for various purposes, but usually for investments, or family trusts are created for family households as they've been advised by their accountant to set up this for investment purposes for their household, family or household. A trust will normally accompany with a trust deed, so a document, quite a large document that has rules and regulations as to how the trust operates. That's set up by an accountant and will identify who the trustee, so the person who manages the trust, including the bank accounts, and who are the beneficiaries of the trust who will receive dividends. Yeah.
And I think that a lot of people usually set up a trust and then have that trustee put it into the file and completely forget about that, or they may lose the documents. So bear in mind that trustee is one of the important documents that you need to always keep it in your file. And especially when you are going to open an account, or if you are going to encounter any of the investment or any sort of structures, make sure that you are going to always bring your trustee with you. And I think that earlier Alex mentioned about within the trustee is going to touch on and also identify who is going to be the one to manage this trust. So it could be an individual trustee or it could be a company trustee. And then both of people as like the company, you need to understand about who is going to manage that. So of course we need to ID you. So if it's going to be individual, we need to have an individual's ID. If it's going to be a company structure, still we need to have an ABN or ACN for the company. And also another one is earlier Alex mentioned about the beneficiary. So who is going to be at the end of the day the beneficiary to take on all the interest? So that is going to be really, really important to know. But about the beneficiary, do we need to have a full disclosure for their information?
With beneficiaries, generally most financial institutions, as they are only beneficiaries to the trust, so receiving dividends and funds each year from the trust, they will not be operating the accounts by the financial institution, as they have no power to operate the bank accounts. Generally, the most basic of know your customer information in line with regulatory body requirements by the government is the name, date of birth, and it can also be the residential address of the beneficiary as well. This is just for bank purposes as well, especially when it comes to understanding if the trustees of the trust were to pass away, or something was to happen. It's also and there are funds left in a bank account. It is important for the bank to understand where these funds would be going to in the event that there is nobody to operate the accounts.
Alex, since you touch on with the event of death, so let's say that if I were the beneficiary of the trust, and unfortunately the trustee has deceased, so how am I going to be able to access to the fund?
Generally, the trust will identify the trust deed, which the bank will take a copy of, will identify who the beneficiary is by name, date of birth, and residential address. And as we also gain this information from the trustees at account opening for KY, know your customer purposes, the bank will be able to, will require that the beneficiary come into a branch to be fully identified at that point in time.
Right, I see. Okay, so that is one of the common trusts that we saw, which is a family trust, or another name for that is discretionary trust. What about other trusts that you can think of?
There are two other types of trust, which is a unit trust. A unit trust is similarly set up to a family and discretionary trust in the way that it's trustees and beneficiaries of the trusts, but it's more for it can be individual or couples or 2 people, 3 people. They've set it up for investment purposes as advised by their accountants.
I can think of a couple of the scenarios. Things like siblings would like to purchase a property, and because they don't really want to put everything under their own personal name, they followed by the instruction by the accountant, they each set up a unit trust, and then they form into the ownership of that property. And then when they open an account, they have to also provide all the unit trust information into it.
Correct.
Yeah. All right. So that one is quite similar to the family trust, I would say. What about the other one that you mentioned?
The final one is a self-managed super fund, more commonly known as an SMSF. This is usually where majority of the time is for an individual or couple, so partners, or sometimes it can be more than 2 people, going up to 6 people. If there is a broader family that are going to be under a self-managed super fund. The purpose of a self-managed super fund is, unlike your more common superannuation funds such as MLC or REST or CBUS, so there are quite more common ones. It's for the purpose that they've been advised by their financial planners or accountants to open up a self-managed super fund and to invest their funds manually.
And I think that especially with a self-managed super fund, like earlier you mentioned about some of the retail funds or even the industry funds, the good thing about what the differences is what we can actually divide it into different things. For the industry super fund was very much like a wholesale kind of things. So low management fee, because it's low touch, personal touch. But at the same time, maybe there are going to be some restrictions for the investment options that you can provide. And then we can move on to the retail side of the super fund. With the retail side, you are going to have more personal touch and also more personal options, even more so of the investment options involved. And because of that, usually the fee is going to be slightly higher than the industry super fund. Then we can also look into the self-managed super fund itself. Some of the self-managed super fund is one of people's favorite variable because you could also acquire for the properties underneath. But do bear in mind that earlier we mentioned about self-managed super fund is highly and also heavily regulated. So it's not going to be suitable for everybody. Usually what I say to my clients is if you were ever think about self-managed super fund, ask you two questions. Do you have time? Do you have energy? And do you have the knowledge? If you don't have any of that, do consider whether it's going to be the best option for you. So I think that with the self-managed super fund, what do we need to have for the to open up an account then?
Self-managed super fund will be similar to a trust. It will have a trustee, so a document obviously identifying who the trustee of the self-managed super fund is. But in a sense, it is a little bit different as it has members. The self-managed super fund has members. So obviously those are receiving a benefit from the self-managed super fund when they hit the retirement age as well. So it's important that within self-managed super fund, they will be, all members of self-managed super fund will be required to be identified by a financial institution. So it's not the same as beneficiaries, which only need the basic information. Self-managed super funds require to be fully identified in branches.
Yeah, and also another point of view that I would like to address is a lot of people are actually setting up a self-managed super fund because that they wanted to purchase a property. Having one single property is very much considered as having one single investment. So one thing that we look at for the investment options here is, of course, are you putting everything into one basket? If you are going to put all the investment into one basket, is it going to be aligned with your retirement goal, or is it going to be aligned with your purpose? So there are so many things that you probably need to consider before you even set up a self-managed super fund. There are going to be quite a bit of cost involved and also time consuming. But overall, if it's going to be what you desire to have, then maybe that's going to be a good option. Do consider to talk to professionals. That's I can't really address the importance of that at all. So is there any other thing that you would like to mention about the self-managed super fund?
So with a self-managed super fund, it's important to note that once you deposit funds into a self-managed super fund transaction account or savings account, this cannot be withdrawn very easily. If you do withdraw it, there can be penalties, especially when the tax returns are done as well. Self-managed super funds usually also have bank employees that regularly monitor these accounts for activity on the accounts. So it's always best to speak to an accountant or professional before funds are put in or withdrawn out of it.
Yeah, definitely. I still remember in those days, there are going to be some dads and moms business, and sometimes the wife may be doing most of the bookkeeping and also admin work, and then once they are doing most of the transaction, they accidentally transfer the account into the super fund because the super fund itself just look like a bank account. But and then they come to us and said, can we just reverse the account and also the payment back? Self-managed super fund works as a super funds structure and also followed by the super funds rule. So of course, once you are going to get into that, just like Alex said, the money deposit into the self-managed fund, it is hard for you to withdraw without any penalty. So do consider that, especially when you are waking up early in the morning, or if you are being really sleepy like Alex now, don't get into the deposit at the moment.
Correct.
Yeah. So besides all the account, is there anything that you would like to have the very last touch on how to open account or close the account?
So opening accounts and closing account are very similar as to individual or joint household bank accounts. With opening accounts, with I suppose to touch lightly on it, your sole trader or partnership or simple structured companies, so one director, maybe one shareholder or two shareholders, can generally be opened online or in branch. More complex companies with maybe additional directors and maybe shareholders that are also involved, trusts, will more than likely need to be opened up in branch. Your trust and self-managed super fund entities will always need to be opened up in branch at this point in time.
I see. And what about transaction, especially when we're looking at for the business needs? Some of the business starting to grow and then they're starting to hire admin staff or the payrolls or even a HR. Any requirement or any needs for that?
Most businesses can transact similar to individual bank accounts with online, mobile banking, branch, post office. They can also, but business banking also does have some more enhanced features. So online business banking, such as being able to add additional authorizers for like human resources or payroll or admin staff onto the accounts, and also additional security methods of token access, which is quite common. So 6-digit authorization codes, and also security of requiring 2 people to complete an authorization as well. It also allows usually a lot of payroll systems, most common payroll systems, to be linked up to the online banking. A lot of banking institutions have set this up.
Perfect. Well, I think that today we touch on with quite a bit of stuff already. And I think that if I'm going to sum up with what we discussed today, obviously there are going to be so many different options here for the bank accounts, but more so is all rely on what type of structures that you have. So we touch on with from the sole traders up to the company, also super funds or even the trust structures. So do consider that there are going to be some requirements, needs, and those are requirements, maybe the additional requirement. And also do consider that who is going to get involved with this open account, and then we might need to have that additional requirement from that. So Alex, what about your key takeaway from today's session then?
So my key takeaway would be to, before going open an account for a business entity, is understand your business entity. If you're not sure, talk to the accountant or person who has set it up for you as well, as you will need to know how your business is set up with the Australia ABN ACN trust structures as well, and have all the relative identification documents required before going to a bank to avoid any delays or confusion at the bank, as that's always quite important to understand.
Yeah, and I think that especially for most of the financial institutes nowadays, they also have a customer service, online service, or even a telephone service. So what you can do is actually give them a call and then understand about the requirement before you waste your time and go to the branch and then deal with things and realize that you miss out some of the important documents. So good stuff, Alex. What we are going to do now is we cover out all the bank accounts. Why don't we do the credit card next time then? If you like what we share or think someone may benefit from the accounts and also the content, please like, share, and subscribe our channel. If you like to book a complimentary consultation about your money DNA, or you would like to talk about any of the banking needs, you can also talk to Alex about this. His contact detail will be captured down below. If you have any questions or any comments, please also leave your comments at the comment section, and we'll come back to you as soon as possible. Thank you for joining us today, and please keep financially fit and healthy. We'll see you next time. Bye.